Thank you very much, Daniel, and thank you for having me. My name is Nicolas Moura. I'm a research analyst at PitchBook Data, covering EMEA private capital. For those of you who are not aware of PitchBook and still haven't been pestered by some of our sales representatives, we are one of the leading data providers for private market capital, covering private equity, venture capital, M&A, private debt, and emerging tech. You may know our parent company, Morningstar, which offers public market research. As I said, I'm part of the research department called PitchBook Institutional Research Group. We like to be called PERG inside the institution. And we publish regular reports, such as the ones you'll see here. So in January, we published the 2022 European Private Equity Breakdown. In February, we had the Global M&A Report. And just a few days ago, we published the Nordic Private Capital Breakdown. All of these reports are free to download on our website for PitchBook clients, but also for non-PitchBook clients. Very important. So I do encourage you to go on our website and download them. All three of these reports are topical on the discussion of today's M&A Forum. And before I dive deeper into some of the data and trends surrounding Nordic M&A in 2022, please note that we'll have a QR code at the bottom of the presentation, so you'll be able to download all the slides if you wish to look into them. So diving straight into it, some of the data. For those of you who know PitchBook, you'll be familiar with this type of chart where we show deal value and deal count on the same chart. And you'll see that last year, M&A deal value was very much resilient. It was a resilient year. We had 195.8 billion worth of M&A deal value across 2,583 deals. And this is quite surprising given the economic backdrop, as we had a shift in monetary policy in 2022 with central banks across the world increasing interest rates and public markets dropping. You'll see that deal count went up 4% year over year, while deal value went down 4% year over year. So in a way, it was a record year for deal count and the second best year for deal value. Essentially, we had a year of smaller but more numerous deals. And on this trend of smaller and more numerous deals, which goes hand in hand with the continued popularity of add-ons, which you'll see on this slide. These tend to be smaller in size, more complementary type of acquisition, and often favored by companies in periods of market downfall because they allow the acquiring company to keep growing inorganically through M&A. One such example was UK-based retailer Amscan, bought out Swedish online retailer Party King for 463 million in Q3 of last year. As LBOs continue to squeeze sponsors with higher costs, we expect add-ons to keep thriving in this hawkish interest rate environment until we have more visibility into the stability of interest rates. And as you can see from this chart, 69% of M&A deal value last year came from add-ons. It was a record year in terms of percentage, but obviously not in terms of volume, as 2021 was that record year. So how did the Nordics do compared to the rest of Europe? So this trend of smaller but more numerous deals was very much seen across the entire continent. So in that sense, the Nordic data doesn't exactly stand out. The region accounted for 11.9% of M&A deal value and 13.8% of M&A deal count, which is slightly lower than it was last year. But what's perhaps more interesting is that the Nordic countries represent less than 4% of the population in Europe. And it very much feels like the region is performing very well in terms of M&A, with some incredible successful transactions out of the region in the last few years. To name a few, iZettle was acquired by PayPal in 2018. Tink was acquired by Visa in 2021. And more recently, Volt, the delivery app, was acquired by DoorDash, American DoorDash. Looking more dissecting by Nordic countries. We are here today invited by the Swedish Chamber of Commerce, and indeed Sweden is the dominant player in Nordic M&A, accounting for the bulk of deal value, almost half of the deal value, 45.2% of M&A deal value, and 42.2% of M&A deal count, which is sort of roughly in line with the proportion of the Nordic GDP and population figures. Moving on now to the top 10 Nordic M&A deals. What strikes me when I see this at first is the top two. They are really mega deals. So we saw Swedish Match get acquired by Philip Morris International for 15.5 billion euros last year in Q4. And similarly, the two Danish healthcare companies, Chris Hansen and Novozymes, merged/got acquired for 11.8 billion euros also in Q4. And the top 10 deals are roughly 20% of all M&A deal value. Another thing that you'll see here is, again, 7 out of the top 10 come from Sweden, which goes back to my previous point on the previous slide that Sweden very much dominates the deal flow. And another thing you'll see is that in terms of industry sector, most of it is B2B or B2C. Diving into some of the sector dynamics, and for, again, those of you who do read our reports will be familiar with some of these charts. You'll see here that B2B and B2C truly dominate as sectors, accounting roughly for 36% and 22% respectively in terms of deal value in 2022. Following those sectors which kept well, we also name energy and IT, which last year had their third best year in terms of M&A deal value. For energy, it can be explained on the one hand by the Russia-Ukraine war, which has rocked the energy sector, elevating commodity prices and encouraging deal making across the entire industry, from public companies getting acquired, as we've seen in Germany, to private equities, attempted disruption of legacy energy providers, and all the way down to VC. On the other hand, we've had some very large investments into renewables, especially on the VC side, in a push to move away from fossil fuels and as a byproduct away from the reliance on Russian energy. On this next slide, I picked out healthcare, which had a record year in terms of deal value. As you can see, in 2022, the deal value was 20.9 billion worth of M&A deal value, which of course is made up in bulk by the Chris Hansen Novozymes acquisition, which makes up roughly about half or just over half of that figure. Now, looking a little bit into the stakeholders of these M&A deals, you'll see from this chart that 2/3 roughly of the M&A deals were corporate deals. So that's your Swedish Match getting acquired by PMI. But what I want to focus on is maybe the other 1/3, which has been growing, which is sponsor-backed, so private equity-backed. And this has been growing along the years from representing 23.3% in 2012 to 35.5% in 2022. And such deals are, for example, Envirotainer. I don't know if this is how you pronounce it, but Envirotainer, which was the third largest deal in the Nordics last year, which was acquired by EQT, among other investors, for roughly 3 billion euros. And really what's happened here is that private equity as an asset class has been growing over the past decade. So to give you some context, in Europe, in 2012, we had 400 billion of assets under management. And if you fast forward to last year, we had 900 billion of assets under management in Europe. So it's basically doubled over the past decade in Europe in terms of private equity. And talking of private equity, you'll see here the top 10 Nordic PE investors by number of deals. And this is taken directly from our Nordic report that came out a few days ago. And of course, you'll see some familiar names. Nordic investors investing in Nordic region makes all sense. Probably some of you are here tonight. I'm thinking of Norvestor, Axel Management, but it's interesting also to see some non-Nordic names out there, like Omnes Capital from France. And the point I'm trying to make is that the Nordic region has really been attracting capital from all around the world. A minute? Oh, wow. Okay. Well, I'll skip this slide in that case. But yeah, the point I was trying to make on this slide was that there's also been a lot of US investors investing in the Nordics. So 14% of M&A deal value last year had some US participation in it. And that keeps growing along the last few years. And finally, just my last slide, touching a little bit on buyout multiples. 2022 was very much a pivot year as we moved away from cheap capital and low interest rates, from going from a 12-year long bull market into a more hawkish interest rate environment, increasing interest rates and increasing borrowing costs for sponsors. We saw public markets correct, valuations dropped, and multiples contract, going from 10 times EV/EBITDA in 2021 down to 6.8 times EV/EBITDA last year. And the moment you've all been waiting for, the QR code. So feel free to take your phones out if you wish to keep some of this data. And that's it. Thank you very much.
Thank you.